It is a great pleasure to stand here and talk somewhat about the Olympics, although I have to say that following what Alex has had to say and that film, and indeed these really rather good little booklets on the Olympics, I'm not going to try and repeat all of the many reasons why the Olympics I think are going to be transforming for London and a real opportunity for the UK to showcase itself to the broader world. What I thought I might do is to set the context of this exciting year for us, Diamond Jubilee and Olympics, in the broader macroeconomic context of where Britain sits in the world at large and some of the challenges we face and why I think that the Olympics are going to be very helpful to us as we grapple with the many issues that we face, and I hope that that will provoke one or two of those questions that, Wendy has already invited. And I start, nevertheless, from the Olympics themselves. The Olympic facilities are all ready. You have a Board of Trade delegation going to London very soon. I hope you will have time to get a sense of the readiness for the Olympics. The preparation is indeed meticulous. The facilities are ready. They do look very good. This is going to lead to a transformation of a part of London which, for those of you who know it, has for many decades been rather run down, derelict, lower land contaminated, and these facilities have created a whole new area of housing, some 50,000 new jobs permanently, an entire new park right in the middle of East London, the first new park in any European urban centre for 100 years, 2.5 square kilometres of it, and it really is going to be a transforming remodelling of a major part of a major city and leave a legacy for generations. We were indeed determined that we would not only run the greenest games ever, but also games which would have a clear beneficial legacy, where almost every penny that we spent, we would have a view of how this was going to contribute to the economy and to the community going forward for future generations. And thus, for example, the main stadium has clearly got a use planned in for it going forward. It will in fact be used as a soccer stadium largely, and if you compare that with the fate of the main stadium in Beijing, I was in Beijing for the Olympics there, and that beautiful bird's nest stadium is essentially unused now. Well, I think we have got a better plan for both the stadium itself and for the velodrome and for the basketball facilities, etc. Some of this involves really some quite imaginative stuff that I think will become a feature of major international sporting events going forwards. For example, the fact that in the basketball facility there's a sort of flat pack technology that's been used which enables us to dismantle the facilities and essentially ship them off to the next major global sporting event going down the track. More generally, it is clear that in the world as it is, barely a year or every couple of years now goes by without there being a major international sporting event of some kind, whether it's Olympics or Winter Olympics or Football World Cup or other Commonwealth Games. One way or another, centre after centre is committing, in many cases, billions of dollars of investment in putting on major global games. And one of the legacies that we want to see out of the London Olympics, just as Vancouver has seen out of the Vancouver and Whistler Winter Games, and Sydney saw out of its staging of the Olympics, is the development of a whole series of industry clusters around the mounting of major games and the ability to provide export services to those who are kind of next in line. And so, for example, UK Trade and Investment has already led delegations of British businesses that have been intensively engaged in the preparation for the London Olympics down to Rio for conversations about the World Cup and the Olympics there over the next 4 years. In short, the Olympics do, we believe, represent a major contribution to Britain's economy, to its ability to showcase itself to the world, its ability to provide major services in other important growing markets as we seek to rebalance our economy and make sure that it's competitive for the 21st century. And it's that last thought that I now want to spend a little bit of time working up a bit. We, the British, are in a position where we're coming out of a global financial and economic crisis that hit Britain particularly hard, and indeed in some ways started a little earlier in Britain because of the role of the financial services than more generally. It really started to unfold in 2007, but reached, of course, its height in the winter of 8-9, and has left our economy with a recession, followed by a painstakingly slow climb out of that recession, and a clear need, and if there's one lesson that all of us have learnt, I think not just in Britain more generally, but more generally, a clear need to find a more stable, more sustainable growth path going forward. We learnt that the way we were growing in the run-up to the crisis, through consumers spending and fueling that by debt, is not sustainable. We learnt that an economy that is imbalanced as between financial services and construction and real estate, which were driving virtually all of the growth, and the rest of the economy is neither desirable nor sustainable. And so what we as a government are embarked on now, and have been with a pretty fair degree of consistency since the coalition government took office, was firstly a fiscal consolidation, which is painful, but we strongly believe needs to be done and we will see through. And secondly, a rebalancing of the growth model of the economy. On the first point, I believe that the markets have rewarded Britain for getting ahead of that curve. We announced essentially from the day the government took office that we were going to address the fiscal position and make sure that we have got down to fiscal balance. We initially said within the lifetime of one Parliament. If we're honest, we know that it'll take a year or two longer than that, but nevertheless, aggressively moving towards balance. And that will bring to a peak and then to a downturn the debt to GNP ratio. And the markets have rewarded us for that. The markets have rewarded us in the form of the lowest sterling interest rates that we've seen actually for many decades, and a stability about the financial environment in Britain that is, I suppose to be blunt, in marked contrast to what you see in the trading bloc that's just across the channel from us, where there are a number of countries that didn't get ahead of that curve in the same way. I want to major more, though, not on that challenge, but on the challenge of sustainable growth. I think this is actually a global challenge and not just a challenge for Britain. The lesson learned from the financial crisis that we have to learn for our own economy is actually a global lesson that we all have to address. And that is that the way in which the world was growing in the run-up to the crisis was imbalanced. What you had was a shift of the central gravity of economic activity from the west to the east, and to some extent from the north to the south. But that shift, which is still taking place, of course, was one in which you had an unsustainable equilibrium that was driving growth. What I mean by that was that you had the rise of those Asian economies that were becoming the producers of the world, China famously, of course, but not only China, places like Vietnam, places like Bangladesh, places like India, producing goods on the basis initially of cheap labor supply, exporting those goods to what increasingly became the consumer of last resort, notably, of course, the United States, but also countries like the UK and Spain, which were running large balance of payments deficits. Very plainly, this is not a formula that can continue. It felt as though it was like a perpetual motion machine at the time, but we now know, all of us, that that can't continue in that way. When I say all of us, I do mean all of us. The Chinese authorities understand perfectly well that their growth model, which was basically very strong export growth and very strong public sector investment, is not a sustainable growth model. And what you see the Chinese trying to do now is to rebalance their economy towards more domestic consumption and more investment in the broader support needed for a modern, sustainable standard of living in things like healthcare. Conversely, the British, and I might venture to add the Americans, who have been driving the economy too much, as I say, on the basis of consumption fueled by debt, we have to rebalance our economy away from that towards more sustainable sources of demand to drive growth. That means, in fact, that we have to get more and more of our British businesses focused on the international opportunities. In other words, we have to trade more effectively, and we have to invest more strongly in our own economic infrastructure. the kindest friends of Britain, I don't think, would accuse it of having a world-class public economic infrastructure for the 21st century. We know we've got some work to do to invest to strengthen that. So trade and investment is actually central to the British growth strategy. That is what will create jobs. That is what will allow us to achieve growth in an economy which needs that reorientation. And by the way, the more that we can encourage British businesses to get into the international markets, the more we know we're strengthening their efficiency. There's compelling evidence that companies that export become more efficient, grow faster, create more jobs, and have greater longevity than companies that stay in the domestic market. That's true for Britain. It is, by the way, broadly a truth that is recognizable in almost any economy when you're looking at, particularly at SMEs. So we're very focused on getting more and more British companies into the international markets, and also on making sure that we're as open and welcoming a destination as we can be for foreign direct investment. We have one big advantage, well, we have many advantages on the world stage, but one in particular that is really close to being unique amongst the developed markets at any rate, is that we're more welcoming, more open, and more culturally open to foreign investment in the economy than almost any of our competitors. And indeed, it isn't just a kind of intangible thought that, it's borne out by the statistics. The British economy has a higher percentage of its economic output supported by foreign direct investment by far than any of its major G7 competitors. In our case, it's about 40%. The American number is somewhere of the order of 10. Germany sits at around 20, just by way of standards of comparison. So our task is, as I say, to encourage more and more exports, more and more British companies to venture into the international domain, and also to make sure that we're as open and welcoming for business as we possibly can be. In that context, we then need to note, of course, that our traditional export markets lie across the Channel. 50%, 45% of our exports currently go to the Eurozone. And you don't need me to tell you that in current circumstances, that isn't a great way of securing growth. The Eurozone needs to sort out its issues. We're delighted we're not a member of the Eurozone. I don't think there will be a single vote in Britain for joining the Euro at the moment. And I say that as speaking personally as a passionate Europhile, strong believer that Britain's destiny lies as part of the European Union, but not being a member of the Euro gives us an important strategic degree of freedom that our friends in the likes of France, Spain, Italy, and so forth do not have. And that's a clear advantage for us, but we have to recognise we're impacted by what goes on in the European Union. We're impacted by what goes on in the Eurozone, and that means that if we're to secure the growth that we need through exports, we need to be looking further afield than the Eurozone. We need, of course, to be looking at the fast-growing markets of Asia, Middle East, Latin America. We have positions in those markets that are too low. Our market share of Chinese imports is lower, not merely than that of Germany, which might not be surprising, but it's lower than that of France and Italy, for which there's rather less excuse. So we've got a job of work to do to encourage more British engagement with those sorts of markets: China, India, the Middle East, Latin America, increasingly Africa, by the way, in recognition of the fact that of the world's 10 fastest growing countries over the last 5 years or so, 7 of them are African. I'm not sure whether we as business communities, either in Canada or Britain or elsewhere, have fully woken up to that fact. But the general point is clear. We need to be looking beyond our familiar markets across the Channel from us. We need to be looking at the faster growing markets of the world. And that isn't just the so-called emerging markets. That isn't just the BRICS. Unquestionably important though they are, it is also some of our older friends. Because when I look at Canada, and as an aside, Australia, what do I notice? I notice that in that world that I was describing, where the shift to the centre of gravity from west to east has driven a lot of production into Asia, that production needs to be fueled by the kinds of mineral and hydrocarbon exports with which the Middle East, of course, is well endowed, but above all, so of course, are Canada and Australia. And it is no coincidence I believe that Canada and Australia are both doing really rather well on the world stage at the moment. I dare say that often it doesn't, when you sit in the middle of a market, you're more conscious of its problems. When you look at it from across the Atlantic, as I do, Canada is in a really pretty strong position. And that means that for us, the Brits, the relationship between Canada and Britain, both in terms of investment and in terms of exports, are important. We actually enjoy quite a good market share in Canada compared with the market shares that we enjoy in some other parts of the world where we've got work to do. But we know that we face a lot of competition. The fact is that we are Canada's second largest inward investor. The fact is that Canada is Britain's second largest inward investor. In both cases, you can guess who number one is, of course. But that alone underscores the depth and long duration of the economic commercial bonds between Canada and Britain. I believe that we need to build on that. I believe that there is more that we can do to encourage more engagement, both in terms of two-way investment and, of course, two-way trade between Canada and Britain. That's why I was really delighted to hear that the Board of Trade is off to not merely Milan, but also London shortly. It's just a perfect example of the kind of thing that we need to be doing a lot of in both directions. I think the opportunities are spread across a whole range of sectors, all the way from, obviously, the resource imports from Canada into Britain are critical to us. And by the way, Canadian exports to Britain rose over 30% last year, obviously off the back of very strong commodities markets to a considerable extent. British exports to Canada rose by 13% last year, which I'm really pleased by, because, of course, that's way faster than the rate of growth of our overall GDP, which is essentially zero at the moment, and also faster than the global average of our exports. In other words, we were doing a better job of growing our business with Canada than we have been more broadly. This tells me that this relationship is critical to us, and this is one reason why I'm here today. I've been in the US for the last few days. I've been in Houston, San Diego, Seattle last night. I was determined, as part of a North American trip, to spend good time in Canada, because this is important, as well as being a great place to come to, by the way. I'm, like many Brits, of course, somebody who has relatives here. Both my aunt and my uncle emigrated to Canada, so I have cousins dotted around the place. So it's great to be back for all kinds of reasons, but importantly, of course, because of the commercial linkages that we need to develop. We have spent this morning talking to companies who are already investors in Britain or thinking about it, and we'll spend the afternoon doing the same. We are always delighted to see major Canadian names in the British market, the Canadian pension funds, the Canadian financial investors who have been so prominent in investing in infrastructure in the British economy. These are very welcome signs of the strength of the interest in both directions. And frankly, we need to develop that. I believe that there's great potential. This is a country which has long, close bonds with Britain. It's a country with which the British are familiar. I like to believe that Britain is a country with which Canadians are familiar. It's a great basis for doing business together. As an aside, and then I'm going to stop, I think this is one manifestation of something that's extremely interesting in the modern global economy, and that is the role of the Commonwealth. The Commonwealth consists of you and us, obviously, and Australia and New Zealand, 4 developed economies, plus some 30 African countries, plus India. This is a remarkable collection of countries for the modern age, if you think about it. You have some developed economies, you have the world's second largest country, and a fast-growing one at that, and you have some of those very interesting African countries that I've just mentioned a few minutes ago, who are themselves taking their place on the economic stage of the world. The Commonwealth is not something any of us, I think, would have gone out to invent if it didn't exist, but it does exist, and it is an extraordinary network of connections that we can all benefit from, whether we're British businesses or Canadian businesses or those from any of the other 70 or so members of the Commonwealth. So there it is. The Olympics, I come back to them, are going to be a really exciting event. Those of you who are not going, please come. I think you will really enjoy it. We are, just so as you know, arranging a whole series of business events around the Olympics. We're not going to let the grass go under our feet. And every single day of the Olympics there will be a major conference of different sectors of economic activity, bringing together people from overseas, British people who have active business interests in those sectors, in Lancaster House, for those of you who know it, a wonderful building right by Buckingham Palace. Like I say, every single day. Government ministers very actively involved. You will see us making the very best of these Olympic Games as what we see as the once-in-a-lifetime opportunity to showcase Britain to the world and to bring world businesses together in a quite extraordinary crossroads of the 21st century. Thank you very much for listening. It's very great to be here. Thank you.